So we are, well, welcome everyone. Thank you so much for joining. Really, really grateful to be here with all of you in a spirit of learning. We are the Oregon Impact Capital Roundtable, which is a fiscally sponsored project organized by myself. I'm Dara Westling, along with Adam Mansouri and Kate Kilberg of Catalyst Law. We have a great group today talking about, let's see, okay, you can see my screen, but now the next question is, can I move my screen forward? 1 second. There we go. Okay. So our topic is investing with a racial justice and equity lens. And I have to say that last year, at 2 days after this moment of May 25th, we had a session and we did not talk about what was going on in the world around us. And I just want to acknowledge, and I regret that, and I want to acknowledge today that a year ago, a pretty large event happened with the death of George Floyd, and many of us already have, or many people have already been paying attention to that work. Some of us paying more attention and really trying to learn more. And so I'm really grateful to be here with this group and continue to learn and be on a learning journey with you. And I think it's a really important topic. It's the beginning of a series. And Ayer, Jones, and others on the panel will describe a little bit about the lenses that we're using for this these sessions. Before we go into the main piece of this discussion, which is the panel, I just have a few quick housekeeping things. We are monitoring chats. If you have questions, just type hand or raise your hand, and we will track your questions. We're recording. We'll send a recap of this via email, and we'll post the recording to our YouTube channel. So if you have to leave early or if you want to share with others, that's wonderful. We also are live tweeting, and the handle is on the bottom of the slides. So if you want to do that, that's great. And we also always welcome feedback. We are on a learning journey ourselves. So feedback and ideas are really important and welcome. In terms of Oregon Impact Capital Roundtable, a number of you have joined us before, but not everybody. So I'll just say that really it's a organic group of people coming together on a learning journey to focus on supporting a vibrant and inclusive economy in our state and in the region. Catalyst Law and TechSoup are organizers of it. And we have both intellectual engagement and financial support from Tiedemann advisors. And we're really grateful for that because this is a mostly volunteer run activity. And we're just really grateful for their help in making it happen. So some of the topics we've covered since our first gathering that many of you might have joined, where we had our state treasurer, Tobias Reed, and others coming together to talk about barriers and lessons learned in the state. We've also talked about other things as part of our learning community, including affordable housing and wellness, a perpetual purpose trust, and food and ag with organically grown. We've looked at, as part of a working group, we've looked at legislative barriers for access to capital for underestimated entrepreneurs. We've looked at how Calvert is addressing recovery and resiliency for small business during the pandemic. And now this series, we're excited to start these discussions. With that, I will introduce, I think everybody probably knows Ayer Jones, but I just feel like I need to introduce him just in case. So he's had about 15 years direct experience working with institutions, structuring and measuring impact of their investments. He's led the Regional Impact Investing Group for Meyer Memorial Trust, focused on program and mission-related investments, and deployed over $50 million in capital. Wears lots of hats, sits on lots of boards, including the Oregon Capital Scan Board, which I think most people know looks at gaps in the investment ecosystem in Oregon and looks at strategies to address that. So with that, I'm going to pass to Ayer. Ayer, I don't think you all have slides, so I'm just going to leave this slide up and correct me if I'm wrong on that.
Yep, no slides. Thanks. Thanks, Dara. This is a great opportunity. This is like one of my favorite topics to cover. I really like this space. I like this headspace, and I like the potential. in this particular area. And this is a lovely audience. Like so many people that I know, so many people I don't know. Miss all of you. Been stuck in this house with 3 kids for 18 months, and feel like it's good to kind of get involved in some of these things again. So anyway, as Dara said, I've been working kind of in impact investing for a number of years. I've always had this focus on how you get money to disadvantaged populations, vulnerable populations. So it could be people of color, it could be rural populations, it could be female entrepreneurs, it could be others. I think the big turning point in my life, because I got an economics degree, I'm a CPA by background, but I read the Muhammad Yunus book, Anchor to the Poor, and it really changed my way of thinking about what capital could be used for. So typically, capital, when you make an investment, it's a form of extraction. So it's basically a way to take capital, build capital, and extract from others. But if you actually started inverting that cycle and thought about capital as a means to empower populations, and you could actually meet communities where they were at, and you had a focus on how you could actually make investments or deploy capital in a way that could serve humanity, serve people, that you have a great tool in your toolbox. It has to be managed properly. You have to think about it. It requires a lot more headspace than I think most people have done in the past. But honestly, I've been thinking about this for 10 years. In the past 2 or 3 years, it's really sort of taken off. There's a lot of people thinking about it. There's a lot of people interested in it. There's a lot of people who want to do more than just sort of make investments by, going to restaurants that are owned by people of color, or going to a hairstylist or something that represents a certain population of people you want to work with. So the panel today is really some people who have used a framework that we're going to introduce to do some to think about equity investing. So investing into disadvantaged populations or vulnerable communities in different ways. And so really it's going to be sort of a dialogue. They're going to lay out what they've been able to do, some interesting takes on this work. And it's going to be pretty conversational. I think most of you know me. I'm pretty informal, not going to do this big academic showcase with a long PowerPoint presentation. I really want people to get out of it what they want to get out of it. And we also have the ability in future conversations to see what direction we want to take it. This is kind of oriented toward the middle. So, not too deep, but also not super light. So we'll see how it goes. So the framework that I've generally used when I'm thinking about equity investing, and it's one of many frameworks you could use about thinking about this, really involves these sort of 4 buckets. First of which is who's actually managing your money. I mean, are they a person of color? Are they a woman? Does the board that represents them, are they diverse? There's the kind of the easiest angle. So literally when we're at the Oregon Growth Board meetings and a new fund manager comes in, people will be doing searches on their computers to look at the board of directors for the fund. And then people will feel empowered to ask the specific question, why don't you have any women on your board? And it's a pretty simple way to think about enacting change, but it's important. So the sort of first way that we think about it is who's managing the money itself. Because that person's getting paid. You're paying that person to do this work for you. And so it's important to understand who they are, and that's a lever for actually, doing some change or thinking about empowerment. The second sort of level in that is who is that manager investing in? So are they investing in diverse teams? Are they investing in rural communities? Are they thinking about veterans and founders who are veterans and others? So that's the kind of second way you could think about it. So you might be investing in BlackRock, but it could be a BlackRock fund that's investing in BIPOC communities in urban settings. So that's another way you could actually think about doing sort of social justice investing or trying to get money into these other populations of people. The third way that we think about it, or I think about it, which is even more complicated, is what do the underlying companies do? So is it good enough that I am working with an African-American fund manager who is investing in African American run businesses. And the businesses themselves are doing payday lending that's extracting from the community or all communities. Like that's another part of this work, is that you can't be ambivalent as to what the underlying technologies are actually doing or underlying investments are doing. So another aspect of sort of thinking about an equity-based way of investing is to really consider what those underlying investments are doing. And then the fourth thing, which is something we're not really going to touch on today, but it's probably something for follow-up, is at the end of the day, let's say you're successful. Let's say you make an investment in one of these funds and they do great. And all the investors are, wealthy family offices. So you've been able to accomplish the inclusion factor up front. You've been able to, invest into some diverse founders. You've also been able to potentially invest in some technologies that could help people. But at the end of the day, the big check went back to the people who already had most of the wealth. So there are other ways to unpack that side of the equation too. Like one of the examples in our town is the Community Investment Trust, which is allowing people in a particular zip code to invest in a piece of real estate that is actually, basically for their benefit, but it isn't just for any retail investor. So these four boxes are kind of the ways that when I'm in investment committees, this is how I kind of think about orientating my question set to a manager. And then it's about also working with your board or investment committee to think about how you can empower them to ask those questions. Because I think this set of questions and this type of thinking is very approachable. It isn't so like nuanced that or technical. And I think it also gets to some of what you can do as just as a starting point in this space. So that's the framework we kind of want to work with today. But the three panelists that we have today really have their own way of using this framework in their work and from completely different places. So I can't see most of you, but I'll just assume I'm doing great here and that everybody's sort of on the same page as to why we're here. Because one of the things I tasked my panel with was, we're not going to make the case that you should be doing this work. I'm hoping that you showed up on this call, like interested in this space in the first place. And if you need to have inspiration or you want to start that other question, like why should we invest in underinvested populations? There's TED Talks, there's other things that can cover that. I'm already there, and I kind of want to be talking about the how right now, the what and the how. So I'll hand it off to, I'll start with Jennifer Ayer, who works at Tiedemann Advisors. And Jennifer and I have actually spoken about this. I consider her a bit of an entrepreneur inside of an organizational wealth management company. She has a few different ways that this work has played out, both with an interested but management team that has a lot of things going on, and maybe it's not a priority. So how inside of an organization like that can you actually get this conversation to rise up? And then she has a few other things that she wants to speak to too. And then after Jennifer goes, I'll sort of introduce the next panelist.
Great. All right, thank you. And please give me a sign if you can't hear me. Otherwise, I'll assume that you can. Great, thanks, Dara. So I really appreciate how you teed that up. And I'd like to acknowledge that, yes, this work definitely stimulates my thinking and my heart, and is actually the reason that I returned to advisory after I'd stepped away for a few years to work on a healthcare passion project. So being able to do this work, I know, is drawing a lot of people back into financial advisory. So yes, I enjoy the fact that we're here as different points along, I'd say, within an ecosystem. And what's great about this work is it encourages us to collaborate with one another and think about the opportunity set and the challenges we each have at our points in that ecosystem. So representing kind of the institutional, say, advisor, participant in the financial markets, that we do not sell product ourselves, but we're advising clients who've expressed an interest in this work and investing their portfolio to reflect their values in this way and also try to solve problems. We realized we were charged with coming up with a point of view, being able to give our advice, particularly as this is still a relatively emerging area in terms of being able to point at solutions that have measurable outcomes where you can really see the problems being solved. We're still somewhat in early days with that. Not early days raising the problem or recognizing the problem of inequity across different communities, whether we're talking about gender or we're talking about by people of color. And so we realized we have to do some internal work ourselves. And I'll say that back in early 2019, we actually thought we were going to have to make the case. And that was a priority as we thought about investing our time, talent, doing the research to come up with a theory of change. And of course, through the pandemic, we've realized everyone is witness together. We didn't have to make that case. And instead, what surfaced was how we actually had to stop and focus on our own role within that ecosystem. We could not advise others to how to use their capital, how to put their values into play through using their capital. We couldn't do that until we checked and made sure that our own house was in order. So we began a series of cultural and DEI audits at our firm, and our president, Craig Smith, who is in charge of our DEI committee as well, he led that charge. And that caused us to revisit pay equity and recruiting, mentoring, advancement, access to opportunity within the firm. And that work has only gone deeper and touched more people at the firm. So a lot of that education that we were thinking of doing has happened through that work anyway, and shared learning. So that was the first thing. And then we became aware of our role in dealing with the ecosystem outside of us. So whether that's the managers that we work with, and not just in impact, if we work with managers that don't self-identify as impact, who owns them? How are they recruiting? Who runs the portfolios? How are they compensated for their work? We also realized we had to look at the vendors we work with that serve us, whether it's the law firm we work with. Where does our own corporate cash sit? Is there a way for us to be impactful in that? So we had a much more holistic 360 view of how we could participate in this work. And then lastly, and this kind of points to a theory of change, we engaged with some outside consultants, and I'm grateful to them for helping us think about how we can actually advance shared power and economic uplift in communities that may not have had that opportunity through the financial markets before. And in that, we realized that terms that we use very comfortably as advisors in this role, whether it's market rate, rate of return on credit, and access to capital, whether it's our traditional due diligence process, where has someone worked before, what repeatable experience have they had, we had to really stop and revisit whether in fact we were just perpetuating the same problems by using that same traditional approach. So we've been revisiting that as well, and I can certainly go into more detail about our theory of change work, but I'll stop there, Sarah, and make sure I leave room for other people.
Yeah, that's a lot of ground to cover. So I hope people are, thinking about this as a broad and deep and complex problem. I mean, that's the nature of it, right? The systems we're trying to unpack are centuries old, and so earlier in my career, I used to think, oh well, there's got to be some silver bullet. There's got to be some way to short circuit this thing, and the reality is no matter what you stand up, the system will reorientate around it and it'll turn it back the way that it was before. So you kind of always have to be diligent, and you need a lot of people thinking about a lot of different ways to approach this problem. And that's kind of what I like about it, is that there really isn't many wrong solutions in this space. And you need a lot of minds applying their thought and energy toward this, because even in the micro scale, like what can I do with $1,000 investment compared to what can I do with $1 billion? There are different opportunity sets, and all of them are important and relevant. So next I want to hand it over to Ricardo, who is your role executive director or?
Yeah, I have multiple roles apparently in the state. You can have 3 or 4 different titles, but I'm technically the investment strategist for Business Oregon, and I'm also in charge of the Oregon Growth Board. So I have the privilege of having Sarah here guide me and provide me mentorship as we make these discussions. But thank you for having me. And
I'll do a quick tee up for you, Ricardo.
Yes.
We gave Ricardo the almost impossible task of taking the Oregon Growth Board, which is an investment community that the state sets aside to make investments for the benefit of Oregon. And 2 years ago, we created a new strategic direction, which would include 3 things: investing in people of color, investing in rural communities, and investing in product companies. And so he kind of had to take a 90-degree turn with our work, and over the past 2 years has been able to actually take what's a pretty vague mandate and put it into action via investments. And so he has a very unique take on what it took to do that and how he's been able to do that. So I'm excited to hear your story about that, Ricardo.
Oh, thank you. I'm glad I didn't have to do that part. Yeah, so like Sarah mentioned, I'll add to that. My personal background is more in the institutional investments, working on the pension fund and larger deals, and this opportunity came up with Business Oregon to focus on more economic development, which is exactly what I was hoping to find. And this position specifically was looking to guide the board through this shift in short and midterm strategy, right? And so I think the results that Sarah has been referencing come from a lot of different factors. One is you had to have a state agency like Business Oregon, State's Economic Development Agency, that prioritized this type of work from the top, right? Then you had, because you needed to be able to support and promote programs so that legislature can then do their thing and get them through, and actually by statute rule that you need to have a diverse group of people to conform a board, people with different backgrounds from different regions of the state, and then bring somebody else with the expertise to guide and make those investments. So just from there, we're in a pretty unique starting point as a state. Not every state has the infrastructure to even put this in place to begin with. Then from there, our mandates are, like Sarah mentioned, pretty vague. We have to earn returns for education programs. And so how you go about earning returns is up to us, is up to the board and up to myself with the help of our consultants. And so previously we had one big constraint that we put ourselves, and also referenced through the legislative intent, which is invest in companies that have a big potential of influencing Oregon and its economy through jobs, through tax revenue, investments in general. Now, this is all through private market investments, and so as you may be aware, it's very difficult to determine exactly how the dollars will be deployed once you commit them. So you have to have enough interest in what these managers are doing, and enough conviction that they will do what you're hoping them to do, because once you're in, you're kind of locked in. So we started working on a framework to do what we have been doing, which is, monoportfolio theory, looking for investments that would fit within our return-seeking mandate, and decided we'd make it just a little bit harder. It's not just finding funds that invest in Oregon, it's finding funds that actually take DEI, diversity, equity, and inclusion seriously, that they're not just, diverse themselves, that's a plus, but that their focus on diversity can be seen throughout their entire investment process. They need to convince us that if we're going to invest in 10 years with them, that they're actually going to do their role in making sure that their process is as equitable as possible, that the deal flow is going to have a certain level of democratization, so that we don't go back to the same old country club, deal flow that has been so pervasive across the industry. That they have a website that they focus on doing outreach and reaching these communities that really historically have not had the opportunity, right? When you look at the first round of financing is the 3 Fs, friends, fools, and family. And unfortunately, a lot of our communities don't have 2 of those. And so really it's a matter of making bets on people that are on your same page and that have the capacity and the willingness to do this work over the long haul. And I won't jump too far ahead, but one of those bets was on Nitin right here. And so I'll let him explain, but this is a good sign that the ecosystem is working in Oregon.
Yeah, so Jennifer works at a consulting firm. So that's like somebody you go to help you place investments. And Ricardo is working in a capacity of actually allocating the investments directly with a consultant on the side. So kind of like in a wealth space. And so Nitin is in the role of being a fund manager who is receiving funds from one of our respective clients. And he has a different perspective on how to actually get to the DEI mission. And he's got a more direct path than we do. So Nitin, you want to introduce yourself, talk about what you do?
Sure. My background, so I'm trying to unpack it without hogging the entire hour and a half, because there's so much that I could share. My journey into a fund manager really started, about 10 years ago when I was part of the founding team of TIE, and we launched TIE Angels. And without even thinking about it, started investing in women, minorities, and people of color. And it's probably because I am one. But why I did that was my own experience as an entrepreneur and a worker, an immigrant worker in this country. I realized very quickly that things were stacked up against me because I kept hitting that proverbial glass ceiling. And through these years of building a very successful company, First Insight, I faced a lot of racial bias, a lot of profiling. I was called the sand N-word by one of my employees. And it molded me into who I am today. And I realized that this is what I was meant to do, which is invest in disadvantaged. I don't even like the word disadvantage. It's overlooked people, because people of color and women, our success, the hurdle is much higher for us, and our success is underestimated, and our ability to fail is overestimated. So we're constantly fighting this battle to get our fair share of the pie, so to speak. And quite honestly, what I've also learned over these 30 years or 30 plus years I've been in this country is that privilege that I've built, through blood, sweat, and tears, the success that I've built, it doesn't matter. It doesn't take the hate and bias away. So wealth creation, while we're striving for wealth creation in these communities, and that's what I do, I invest in African-American women, people of color, LGBTQ. We started in 2015, thanks to the validation that Sarah and Rukai gave me, 2 people of color. It took 2 people of color to validate me. And I had already become successful, but I never got that validation that I could do this. I could be a fund manager. And it takes that kind of trust in somebody like me who was just angel investing, but producing some success and results, and to show me that I can do it. And so I did, but it hasn't taken the hate and bias away, even today, despite my success. So I want to be really clear about that. And it's a multi-generational challenge in front of us. And the events of, today was sort of momentous, Dara. I'm so glad that you pointed that out, that it was exactly about 12 months ago that, the George Floyd murder happened. And that event itself has changed me. So today, first fund that we started in 2015, we thought maybe we can invest, of the total fund, 40% would be women, minorities, and people of color, because there was all this narrative about there's no pipeline. Why are you doing this, Nitin? And somebody from this town told me, you should just invest in your own people. And I thought that was the most racially biased comment I'd ever heard. But we took this challenge on with Ayer's support and all the investors that came in, including a bunch of white males that helped me. We ended up with Fund 1, we've returned like almost 60% of the money back in 4 years. And more than half are women, 40%, 50% people of color, 30% African-American. In majority of the investments are here in Oregon, which is the widest, Portland, which is the widest in America. And now with Fund 2, which we thank you for the support from OGA and Ayer and other great investors. In about 9 months, we have made 18 investments. 60% are in Black founders that are in tech and healthcare. 95% are women. And we're going to build a really successful fund too. And we haven't even hit the 40 million yet. We're still working on raising, but I was able to raise, in about a year, about $30 million. And the world is open to us. This country is open to us to make investments in these founders that, people say that there's no pipeline. Of course, there's a pipeline. You have to be intentional about what you're doing, but it takes the hand of two people of color who had access to capital to grab my wrist and say, we're going to change your career trajectory. And for that, I'm really thankful. And that, to me, that's what it takes to create this kind of impact and success. But this is going to take a long time to get there.
Thanks for the praise, Nitin. But just to be clear, I'm not selling anything here today. So
as we're talking about this, Sarah, I was just remembering that momentous meeting that we had, and it really changed my life. And I'm not the same person I was 5 years ago for that reason.
Well, I think that's this is like one of these stories, right? That actually can come from this. It's about empowerment, right? It's about trying to use dollars to facilitate more than just transactions. Do more. The access to capital part of the equation, that's what we're talking about here, is one of these critical elements that has traditionally fallen behind all other things. There's tons of government programs out there to help people learn to be entrepreneurs, but there isn't reciprocal programs on how to actually get them capital. So that's what a lot of this work has been. So Jennifer, I'm interested in your space about, say, the past 12 months. It seems like there's been a lot of interest in this area. You're getting inbound calls from people who have wealth or whatever else, calling you up and saying, what can I do in this space? What's the entry point for folks, and what sort of things do they need to do internally before they can actually be ready to start to orientate a portfolio or make investments into people of color or gender lens investing or other things like that?
Yes. Well, there's a lot that people can be doing. And when we think about this work, we start by separating it into two kind of main areas. And the first is where clients are able to express their values just directly in the pool, the portfolio that is primarily about a return back to them. They're primarily the beneficiary in terms of growing their own wealth. And that might include equity screens, tilts as an expression of those values. And there's a lot actually being done in that space. It might be a passive portfolio, a separately managed account where by identifying certain values and opportunities where public companies are increasingly being encouraged, pushed, and now volunteering to share their policies, not just whether they have diversity in the C-suite or diversity on the board, but actually whether they have other policies that create safety for people, whether they are looking at their supply chain. So not just simply what's happening in their company, but if they're sourcing from other parts of the world, how are they paying attention to their supply chain? And we're seeing a lot of sophistication and growth in that area. So as an entry point, I would say that's actually a very accessible space. And we're also earmarking, we're beginning to think about municipal bonds in particular. That's certainly not as applicable to a lot of the foundations we work with, but for families, there's a lot of work still to be done in terms of understanding where municipalities are really leaning into this and where we can actually judge whether it's how many people are in control of decision making. I'm probably not the expert on this panel to really talk about this, but we have more to learn, we've identified, and we want to be able to bring that more into the mix. So we separate out ESG investing, values alignment investing in this passive pool I mentioned, and that which benefits the client more directly from what we think of as longer term, more problem solving, more solutions oriented investing. And that tends to be private, longer term, less liquid. It could be market rate. It could be perhaps less than market rate if that's the goal. That's the part where we've been working hard to establish a theory of change so that, to your point, there's opportunity just flooding the market. And our view is it's important to move and keep moving, but do it with the same kind of rigor and thoughtfulness that we've done everything we do. Because as I said at the beginning, there's a lot that hasn't been borne out. We don't entirely understand the influence of changes in fiscal policy all sorts of government policy, how that's going to affect this decision making. We don't necessarily understand exactly where grant making and philanthropy maybe ends and investing like this returns. The truth is the two increasingly work together, don't they? And we want to think of them as resources to be used in tandem. And so that's where our deeper analysis and theory of change work is taking us. And we've really narrowed it, I think, as most people have, we've narrowed it to the two initial legs of the stool, which are investing in entrepreneurs who themselves, either entrepreneurs directly or investors who themselves are women and people of color, where they own the funds, they're going to be owning the upside, and their entrepreneurs themselves in communities are going to be benefiting economically. That's really important. And so what we're starting to think about is, how do you move outside the city centers or outside of the entrepreneur hubs, where you see a lot of technology and a lot of this kind of talent, and how do you start to look between the coasts or wherever else is a little bit unexpected, where you have lots of entrepreneurism need, and institutional advisors like us could have an opportunity to really make a difference. And then the other leg is on the credit side, and really understanding how we can change the narrative of seeking market rate return, when in fact market rate has typically benefited, again, that investor who's lending, as opposed to really empowering the community and then measuring that for impact. So I think maybe the individual one, the investor who's asking this question, seeking the next steps, can really think about whether they want to move beyond some of those initial tilts and screens, and there's lots of opportunity to do that, and whether they want to start to think about long-term problem solving.
Great. So let me ask one more question, Ricardo. So let's say I'm like a staff person at an organization, and I get tasked with reviewing the 401k administrator, and I am interested in having the 401k administrator consider doing gender lens investing or racial lens investing, and I really want to know those questions. Like, could you give a little background on how you brought the consultant for the Oregon Growth Board, who doesn't necessarily specialize in this type of investing, how you were able to facilitate discussion with them to get some of this work moving, and what that actually looks like? Sure.
Yeah. It wasn't my easiest task, as I started a new job during a pandemic, but it ended up being a fascinating one, because I started as a consultant myself right out of college, and so I understood pretty well what the protocols and incentives in institutional level investment consulting are, and they don't necessarily align all the time with a newer type of dynamic like what we have here. We have asset allocation models that look at data based on historical track records and volatility, and try to optimize returns depending on a client's desired profile. But when it comes to actually introducing an entire new lens, not an asset class, but a lens through which to look at all the investments that you make, it makes breaking the mold a little bit. It does mean that we had to have multiple conversations with the consultants as we were going through our pipeline. We had a certain level of conviction in different asset managers. Some were large institutional billion-dollar fund managers. Some were second or third time fund managers trying to get up to 50 million. And from a consultant perspective, you're gonna make a bet on the one with the longest track record and the one that's gonna protect you from the downside the most. At least from the traditional modern portfolio theory level of thinking. So what we had to do was really think to ourselves, all right, what is it that we're trying to accomplish here? We write $2 to $10 million checks. We're not going to solve the world hunger here. We're not going to make a significant impact based on a single investment. So what kind of portfolio do we want to build? At the end of the day, how are we going to explain how each of these investments fit within what we're advocating for, right? A more equitable portfolio. And so that meant taking a look at the investment options that we had, reducing the importance of track record itself, which is a difficult thing to be as someone with our background, and making more of a bet on the horse. You're betting on the general partner, you're betting on his team or her team, you're betting on that potential relationship, right? Because as I mentioned earlier, you have to be on the same page. And that means that whatever materials we get from our consultant, we are going to look at track record, and we're going to look at strategy and team and everything that a traditional portfolio manager would look at. But there's going to be a section on diversity, equity, and inclusion. We're going to look at we're going to look at it as a criteria. What do we think about the team? What do we think about their current portfolio and how diverse it is? How do we think about their process? How they're actually going about finding new deal flow? What sort of connections they have within these networks, because they are different networks, and what is the potential that they're going to continue to do that? In our case, we have the extra layer of it being in Oregon, so it's definitely not as easy when you're trying to allocate that size of checks. But in that case, a good example is we were trying to find an investor that really focused on the Latin community, so that we can make an intentional investment. We had made good strides in women-led funds like Rethink Impact, the largest women-focused VC fund in the country. We had made a commitment to Nitin over here, who's doing an incredible job in Oregon. But we couldn't find anyone local that had a specific fund on the Latin community. So we worked with a consultant, we worked with other limited partners, and found Marcos Gonzalez in Los Angeles, who was starting his own fund called Vamos Ventures. We talked to him several times. We did a lot of work trying to understand him, develop a relationship. It honestly helped me to be able to make that connection. I'm originally from Mexico City, and so we had a lot of understanding as to our background and how he got to where he is. And we ended up, we had to compare him to $2 billion funds. And, they were difficult conversations with a consultant, but at the end of the day, I said, look, we have to start figuring out ways to bring in capital out of state into Oregon to help these communities. I believe in him. I'm going to bet in him. He assured me that he was going to do his best to establish an actual team in Oregon and invest time in Oregon. And a fund that was struggling to fundraise at the beginning of COVID ended up doubling, almost tripling the raise that they were going for. They got a lot of investors, not just ourselves, but it comes in waves. Once we start getting some institutional support, other institutional investors buy in, and now they have an almost $50 million fund, and they already hired an associate in Portland that's gonna give them deal flow from Oregon. So it's about trying to find ways to get creative and actually force changes within the traditional investment process.
Yeah, I love that description of like trying to think about what's not working about the box right now that all these funds and strategies fit into, and then modifying the box to actually, produce another door, or another path for alternative ideas to come in, and to consider the fact that a diverse team is an asset and not just a nice to have, but a critical to have. Like that sort of work. I mean, that's what this work is about. It's incrementalism at its best. But we can always do better, and we can always ask the questions, and we can always force the hand of people who are, providing us with services. Dara, how are we doing on time? I wanted to go back to Nitin with something else, but if we want to go to breakouts or wherever.
I think we'll give it another 5 minutes and then do a quick breakout before Q&A.
Okay.
If that works for you.
Yeah, totally. So Nitin, what's your theory of change with all this work? I mean, it's transactional by nature. You're kind of working with a few entrepreneurs here and there. They're building some wealth or whatever else. One of the criticisms that I've heard about investing this way is that so what? There's, 15% of the people or whatever in the US are Asian. If I invest in one Asian fund manager, doesn't mean that's going to help the Asian population out. So is there something else to that argument? Like how else could you get to, like, is there another ancillary benefit in actually trying to invest in these types of people, these types of populations?
So we do a pretty good job of surveying our investments. Not just about, it's not just about who we're investing in, it's about who they're hiring. Like the impact isn't just stop at, okay, I invested in 10 Black founders or one Asian founder, or 5 Latinx founders. We also query them and find out who they are hiring, right? And what we're finding is, and this is again self-reported data, that nearly half of their employees are from those communities. And so that's one level of impact that we look at. I mean, you were talking about, sort of sectors and, the impact to the communities. I mean, this is a direct impact into those communities, right? That they're actually hiring people who look like them, or they're hiring more women. Women founders in particular, we find, tend to be more D&I conscious than the male founders. So, so those are the things that I think are important, that and then if there is an exit, which is what we really focused on, is we want more of our portfolio to be liquid. We're not traditional VCs that invest in 20 jumbo jets and 18 crash and 2 make it. We're on the flip side of it, where maybe 2 crash and 18 make it, because there's a level of sustainability and wealth creation for these founders that's important. And if they create wealth for us, they create wealth for themselves, and they create wealth for people who are working for them, because most of these early stage companies offer stock options and other incentives. And when you invest in tech and healthcare as your primary focus, the salaries and wages are much higher. So we're looking at the theory of change, as you talked about, is wider than just who we invested in as founders. So that's equally important. And then also, one thing I want to point out is that, about a third of my current LPs are South Asian. And we came here to this country with nothing, and we'd have to, fight the battles and do our thing to get this privilege and wealth. These are all successful entrepreneurs. And they are investing in Elevate because they feel very strongly that they can add value, not just through their money, but their own experience. So mentor capital is just embedded in Elevate through the LPs, and not just the South Asians, but everybody else, including other entrepreneurs, whether they're white or Asian or African American. And the idea is that we provide our time and energy, and we don't charge for it, to help move this needle forward, because these founders, not only do they need our money, but they need our connections. They need our advice to be successful.
That's great. Well, thank you, everyone. We're going to do a Q&A session after the breakouts, but yeah, thanks everyone on the panel. That was awesome. It's great to see everybody in the audience too.
Thank you.
Ada, do you want to take over here?
Yeah, sure. Thank you all for that discussion. Super thoughtful discussion. Much appreciated. We're going to go into a randomized breakout here, just discussion session for about 10 minutes. And our question is relatively broad, but the question is, what ideas are you taking from this discussion, and what other barriers, if any, do you see to this sort of impact investing through this lens? So feel free to think about that for a minute while we randomize the rooms, and we'll go into discussion.
Yeah, we're gonna take a couple of questions. I wanted to just do a quick check-in with everybody and just say, like, I've been thinking deeply about this work for like a decade, and it's I vacillate between being incredibly excited about it and then also being completely kind of overwhelmed by it. it's really deep. There's a bunch of nesting problems. Things are interrelated. That's how kind of systems work. That's how systems orientate to the advantage of certain populations over others. So my orientation for this work and the thing that centers me in it is really to think about it as like a career-long passion project rather than something I can get done quarter to quarter. You know, I need to continue to challenge people. Frankly, I've seen a lot more progress made. My dogs get some opinions too. Maybe I'll cut it off and just let him finish my sentence. Anyway, if you guys are feeling overwhelmed, we'll have more time to talk in some other sessions. And I think there's some ideas that might percolate up. And I think the panelists and myself are, you know, we're really in this work and interested in it. So I think it's natural for people to feel a little bit, you know, overwhelmed by it or wanting to do something right now and not being able to know exactly what that is. That's fine. You can find.
So thanks for reframing that for us, Ayer, and I hope everybody had a fruitful discussion there in the breakout rooms. I know the technology, it's not quite as easy as all of us being there personally, so thanks for bearing with us. I just wanted to open up the floor just generally if anybody had any feedback. We're going to sort of transition into a Q&A phase of the event now. So if you want to put your questions into the chat, if you want them to be a little bit more, you know, composed. Also, if you just have any general feedback that you want to chime in here, it's going to be tough. We have a lot of participants on the call, so I think chat is the way to go. But did want to give people just like a brief moment to kind of chime in on what they thought. You know, other than Ayer for president, if there were any overarching themes in the discussion period there. So feel free to chime in now, and also if you want to compose, you know, something in the chat, I will queue those up for Ayer or any of the other panelists. Did anybody have any thoughts on I'm curious about barriers to either through personal experiences or you know, professional experiences. I think we've had a blend of touched on a blend of those two things in the panel discussion. But what sort of the real barriers are to doing this work and making, you know, that we're talking about a paradigm shift in a lot of ways. But is there anything, I'm new to this, you know, to the impact investing world. So where the rubber meets the road, so to speak, are there any sort of barriers that are common to people or not common that really sort of come up, you know, that makes this work more difficult, whether it's language or institutional, you know, structures or anything like that?
Are you asking this of the panelists or are you asking everybody in the audience?
Well, to the extent anybody in the audience has any experience with it, but I think, you know, obviously the panelists, I'd love to hear your take on it, but, you know, just I think where this question is coming from for me personally, as we sort of geared up for this event, was in the use of the word BIPOC, for example, to capture a whole vast you know, swath of people that are either underrepresented or underserved or any one of those sort of words that we've used in the past for these marginalized communities. And I think a lot of people have taken BIPOC at, you know, at face value, but as part of my learning process, I've learned relatively recently that BIPOC maybe isn't the most helpful word to use, you know, when you're talking about let's say marginalized or underserved communities. So that's sort of an example of, you know, where the language is limiting, but is there anything else that, you know, as these conversations progress that people find that are limiting the progress in ways that are either not obvious or totally obvious?
Listen, here's what's limiting the progress. It's hate and bias. And we were just talking about it while everybody was in the group. We don't talk about that openly. we tend to sort of glean over that. And that is a, as Sarah was saying, we don't want to overwhelm ourselves, but that's the crux of the problem. And that has not been solved yet. And I don't know how long it will take to solve that problem. But as long as that exists in this country or globally, we're going to have this problem. And we're going to keep coming up with all kinds of lingos and terminologies and so on and so forth. But the core problem, and even around investing, is that what exists? And that's what forms opinions and decision making. It's centered around that. And until we really can openly talk about it and figure out a way to kind of fix that issue, we're going to keep talking about this.
And I'll just expand on that a little bit. I'm a psychologist in the room, and I work with this unconscious bias and bias all the time at work, and I help large organizations adopt change. And one thing that the conversation doesn't have, it's like the silent elephant in the room, is this idea of the white man saying, what if there's not enough room at the top for me and everyone else? And what do we do with that? How do we actually address that elephant? And that, we talked about that briefly in our breakout, but I think, if white men are in many of the power positions and many of the systems in place around investing cater to white men, how do we not just reinvent the wheel on the side for the rest of us, but actually help merge those two things together? And I think part of that's the bias, part of that is fear, part of that's not talking about things, and part of that may also be just education in general, right? Like people just, half the words that Sayer said today, I don't even know what those words mean in English. So, I'm in that boat too, and I've known him most of my life. So just education, I think, is one thing we need to work on in general.
Absolutely. But I think part of that education, it needs to start in the schools. And I was talking about that because I'm putting a lot of my effort now into changing the look of the school boards. And I just did that with the Beaverton school, where 3 women of color got elected, and I supported there were 4 of them actually. And it was just took minutes to do that because I empowered my community to participate in the school board election process. And I think that had an impact. But, one of my white female investors who has a foundation, and she's just the most amazing woman. And I had lunch with her some months ago, and she told me, she goes, the only way we're going to affect change, Nitin, is we have to learn, white men have to learn to share the power, right? But that learning needs to start from the childhood, and it needs to start very early. I'll give you a couple of examples, and I'm not going to name people and I'm not going to name the companies, but I am on the board of 2 companies. One's led by a white Hispanic, and in this last round of funding they raised, I had to step aside as the board member. Okay. And now there are 3 white male board members. I'm just an observer. In the other case, it's a women and a white male-led company funded by a fund who has gotten OGA money, by the way. They have asked me to step aside from the board completely. And it will be 3 Caucasian board members because they want to have a very efficient board because they're going to go about building $1 billion company. This is happening to me right now. Right now, right?
I find that disturbing. I'll just say for the room, I'm seeing the opposite of that in many of the places I am and in many of the clients I work with, where they're immediately starting to diversify. So I think there's a spectrum.
Yeah, and this company is like talking about DE&I, and I said, you can't have DE&I if you're going to start eliminating people who are of color, who are one of your big investors, off the board, right? Because our check size isn't as large as this white male fund manager, right? So it's to me, till we hit the hate and bias issue head on, this problem will continue to perpetuate and exist no matter what people do, which yes, there are people who are very intentional, they're trying to make a change. But, I just saw a report from one of our portfolio founders, Stephanie Lamke at Blendor. She's now in the ESG space, and she did a report on some top 200, 300, 400 companies. And, you know, underserved minority entrepreneurs are like pittance in the executive team and at boards. So what we're seeing right now is just the beginning, but it's still, you can't affect change till you work towards eliminating hate and bias in our society. We're not going to make the progress unless we start there and start at very low levels, at the school level.
So my kind of version of the theory of change here is that, our financial system, our economic system was set up to extract. It was set up to take advantage of natural resources, take advantage of labor, take advantage of a whole lot of people. And it works. And it does. It's a very efficient machine for doing that. And frankly, so long as it's still working and still doing that, then there isn't any incentive to change. So why would people do anything differently? So my theory of change is until we have majority of people of color in which the system is actually working for them, then people will want to change it because it isn't working for them anymore.
Yeah.
So my theory of change is like, I want to empower people. I want to see people's ideas flourish. I want to see entrepreneurs get raised up, and I want to see them just out there killing it and doing great and hiring people that they know and investing in their ideas. And at that point, at some point, that's what's going to have to change the system, because then it won't work for the people who are in control anymore. So that's my theory of change, and that's what motivates me in this work. But I know that's not going to happen like by the time I retire. It's just, it's sort of what motivates me. And like, that's what I'm trying to educate my kids about, things like that. So I know
I'd like to jump in, if you wouldn't mind letting me jump in.
Please, yeah.
So I think part of Atha's question goes to, I'm going to take the bottom side, and if you wouldn't mind. So from the people who said we're committed and let's go find people. So I can speak to my personal experience of here's an RFP for you to fill out, complete. Great. We're trying to diversify. But then I think it was Jessica who spoke earlier, but then what I was filling out was really me competing against the traditional firm. So if they're going to ask the questions, then you can't make the same RFP be for the same one. Like how many clients do you have like this? What's the size of your assets under management? Well, it'll be 50 million more if you hire me. So the problem becomes that if you go, thanks to, I see Jennifer back. So if you go and you go to ask, so I think those who cared enough to actually ask, but then they have to watch what questions am I asking? And if change is I'm going to change, then I need to look for capacity, I need to look for education, I need to look for the things that are predictors of success, but not like give me your success, rather than give me the predictors of your success. Otherwise, we won't be able to compete.
James, I so agree with you on this.
Yeah, James, thank you for that piece. We could go on about this, and I have other thoughts as well, but I do want to give a little bit of time for some of the questions that are here. We won't be able to get to all of them. One coming from Scott Robinson here quickly. I'm curious about any KPIs that are used relating to this topic. KPIs on the various levels at companies, at funds, et cetera. Can anyone speak to any sort of performance indicators that are used? Is that a metric that is useful or that is relevant to this type of work?
Yeah, I can take a first stab at that. So there's different layers to this answer, but if you look at the top institutional, large pension fund level, that relies mostly on the diversified, mostly passive, low-cost investment options. There's a lot of work being done on understanding the actual statistical factors that determine what is the alpha generated by these sort of strategies, right? There's ESG filters, ESG, Fama French, all these statistical regression models that help us kind of distill the effect of a good governance within a company. That is kind of on one end of the spectrum. But what we're talking about here more on the private markets, it's funny, seeing funds that have KPIs for diversity, to me, is the biggest KPI. It means that they're actually paying attention, that they're keep doing their best to track these metrics, right? They're not all the same, they're not all perfect. This is information that is usually relying upon, self-reporting data or surveys. And so you have to take it with a grain of salt. But the fact that you see the intentionality there within these GPs is, to me, the most encouraging part. Then I trust or get convinced by GPs like Nitin over here that they actually care, and then they keep track of the data. And as part of the growth board, we have a survey that we send out to all our investment partners, and we ask them, not just how is your investments, how have they performed, but how have they performed in Oregon, what sort of an impact they've created, how do your diversity numbers look, what percentage of the companies have BIPOC or minorities within their boards. You get into some of the details there, which makes it harder to compare, but just the fact that we are asking for it and putting pressure on GPs to provide it, I think is a good step in the right direction.
Thanks, Ricardo. I think we have time, and Dara, you can feel free to shut me down if we need to move on to updates because it is 5:22. But if we have time for one more question, I'm going to read Emmeline's question here regarding unaccredited investors. So there seem to be many options for investing for accredited or institutional investors. Are there any options for non-accredited investors who account for 90% or so of the population? And do you think that there is a need for more of these options? And I'll add on, if so, how do we empower more of those options for these non-accredited investors?
I can answer partly this question. There's one.
I'd like to get Jennifer's take on it as well, then.
Oh, she is? Okay.
Well, yeah, it's good. Jennifer, is that an area you think you could speak to, Jennifer?
I'll encourage Nitin to go first, only because it's true that we do work primarily not in that space. So we spend a little bit less time there, but we do talk about how really doing this work thoroughly does mean making it more accessible broadly. And we're well aware of that. So I'm really open to ideas and interested.
Well, there is a crowdfunding option. There's certain limitations around it. It's pretty expensive, but Republic is a crowdfunding platform that has supported Backstage Capital to actually raise money into their fund from unaccredited investors. There are some limitations around it. It's not something that I would pursue as a fund manager right now because of all the regulatory requirements, but it is possible to raise money for funds through these crowdfunding platforms now.
Yeah, and the point I guess that I would add to that is that we're still in the early days. I mean, it wasn't, 5 years ago you could have these discussions and you get blank stares. In fact, if you called a fund manager in and you were to ask them, how many women do you have on your executive committee? You'd see them do the mental math in their head. And then it was always somebody in marketing or something. Oh yeah, no, we have this new associate in marketing. And now these conversations are a lot more fluid. Our consultants know what to ask. So all the fund managers, when they come in, they present this information. But to Ricardo's point, we don't have the data yet. So we're still probing them with the data. So it's an evolution on how we can actually get there. But that's what these bigger, more sophisticated fund managers, it's an emerging space. I would imagine that 5 years from now, there's going to be plenty of retail options through Fidelity and Schwab and other things like that will be offering this. And then it's a question of basically, is this greenwashing? So what am I actually investing in when I'm investing in that social benefit BIPOC fund that's being offered by Charles Schwab? There's a whole different problem that comes from that. But I think there are ways to bend this toward the retail consumer as well.
And along that same line, this is actually also a nod to the last question, thinking about KPIs and how this is an emerging, evolving space. One of the things we talk about in establishing our own theory of change is maybe in a year, and then again in 3 years, as more information comes in, it will also be about how this lens, this equity lens, is then applied to environment. How does it change how we assess maybe environmental justice, and what is that going to look like? Or how do we judge in the context of how affordable housing maybe is evolving? Maybe we've always had affordable housing as part of our thematic approach, but what does it actually mean to think about it in a different context, holistically, development in partnership with communities? So it's changing a lot of the existing thematic investments. And I think that's where some interesting, how does that network together produce an effect? How can we measure community advancement, wealth staying in communities? How do you measure that? What does that look like? I think that's still to come in many ways. So hopefully we'll be having that discussion here in 3 years.
I am going to suggest that we close on the Q&A just because we're out of time. Unfortunately, I wish we had booked longer. I'm really grateful to all of the Sayer for all of the thinking and the panelists who really brought so much to this in prep and today, and all of the great questions that we really need to figure out how to address and process. I do want to have Ashley Henry. We usually try to give space for community updates, and I know Ashley was going to share a community update, and then I'll close very quickly since we're almost out of time. So Ashley, thanks for your patience.
Sure, thank you so much for having me. And it's hard to believe that the last time I provided an update for this roundtable was in the before times. During the February legislative session, you held an OICR, and some of our partners who were advocating for House Bill 4033 presented to you while I was down in Salem that day. And while our bill did not make it over the finish line back in February, it did actually help us to create a much broader coalition of organizations from around the state who share similar concerns about the lack of access to capital for women and underrepresented entrepreneurs and rural entrepreneurs as well. There are a lot of small businesses owned by women and people of color throughout the state that are never going to pursue venture capital. They don't necessarily have an interest in becoming a traded sector company. So a lot of avenues are not available to them. And so we have been pursuing a bill that would increase the opportunities for CDFIs and others to make loans to businesses by reducing the need for them to rely so much on collateral, which is often a manifestation of intergenerational wealth. And so we, in the 2021 session, have been working in collaboration with the Governor's Racial Justice Council to advance House Bill 2266. And we're hoping that with the recent progress on the unexpected revenue forecast, that will be a positive sign, and that we will be able to provide you with more updates about the exact mechanism in the coming days. But in the meantime, I shared a link to a Google form for those of you who are interested in also tackling this challenge from a policy angle as well. It's admittedly painful and exhausting, but I guess all good things in life can be at times. And so I'd really encourage you to let us know if your organization or your firm would like to be either informed or even a part of what Oregon Small Business United is doing. I'd be happy to get you on our email list or have a one-on-one conversation with you at another time. So thanks for the opportunity to provide the update. And if anybody has questions, I'm happy to respond.
Thank you, Ashley. So with that, since we're at time, I just, again, really want to thank all of you for staying engaged and participating in what is, as Sayer says, a pretty overwhelming conversation, but a lot of really great work happening with this panel. And I want to flag that July 14th, we have tentatively set a date for our next session, We were talking about doing, looking at a community lens, but I think we'll do a little bit of a debrief after this to think about what makes most sense as the next session in the series. So we welcome your feedback at any time. And we have your email if you signed up for the Eventbrite or if you've been part of our network before. So we will send a follow-up and please stay in touch. So thanks again to everybody.
Thank you.
Thank you.
Thank you, everybody.